Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right. So today is not necessarily a home business topic, but we know that taxes are all encompassing, right? There's your business side, there's personal. It all works together. But today, I'm specifically focusing on retirement accounts because in the last couple days, I've had people reach out to me talking about withdrawing from their retirement account. So let's talk about that so that you can really understand the tax implications before you go and make this withdrawal, okay? So first of all, historically, when IRAs were created, they really were a great idea. Meaning that at the time that they were created, tax rates were really high. The top tax rate was like 70%, I do believe. It was something absolutely bonkers, right? So putting your money into an IRA was definitely a great idea because at that time, tax rates were coming down, okay? That worked for a minute, but then tax rates started to increase. Now, the problem is that when you are, as you age, right, you also lose tax deductions. You wind up paying for your house. Your kids are grown, so you don't have them as a tax credit anymore, even if you are still sending them money, right? So you lose tax credits and you lose deductions. So you wind up having more income and not enough deductions. And so when you're taking out your money now, you might actually be paying more in taxes on that money just because, the tax rates may be increasing. Even though we just had a tax cut, there are still some people that were shifted into higher tax brackets. So if you've got more money and no deductions, that equals higher taxable income. And so this is, the history of IRAs and understanding how they were really a great idea back in the day. But, now let me say this. I am not saying do not save for your retirement. I am saying look at all of the options to figure out what's best for you. All right. So I'm not saying an IRA is a bad idea either. I'm just giving you the history of the tax part of the IRA. Okay. Now, so the way that the laws are now is that if you are over the age of 59 and a half, you can withdraw from your IRA penalty free. And you have required distributions once you reach 70 and a half. Now, penalty free, do not confuse penalty free with tax free because you still have to pay income taxes on that money when you withdraw it. Okay. And so this is where all the trouble comes in. Okay. Really? Because what happens is that people then go and withdraw from that retirement account for whatever reason. You might have a huge expenditure that you need money for. You might have, had some sort of disaster in your home. Whatever the reason is, you look at your retirement and say, okay, there's a big pot of money right there that I can draw from. But there are some things that you need to consider before you go and make the withdrawal. Okay, like I said, number one is penalty free does not equal income tax free. So if one of the things that I recommend is if you are taking an early withdrawal from your retirement account, that you have federal taxes withheld. The reason is that you have to consider the other income that you have. It could be W-2 income. It can be Social Security income. It could be business income from your side hustle. Okay, you've got to take all of that into account. Because what happens is when you don't, you're going to wind up with a tax bill that you're not ready to pay. Let me give you some examples. I had a client last year who was in charge of her father's finances. He was an elderly gentleman. He's in a nursing home. And you know what? She needed money to help pay those bills. So what did she do? She withdrew from his retirement account. You would think, okay, that could make perfect sense. But the problem is that again, there was not enough taxes taken out of that withdrawal. So what wound up happening is this man also had Social Security. So that made just about all of his Social Security taxable. And so when I had to sit down with her to say, hey, this is the tax bill that's due because of this withdrawal, I thought I was going to have to resuscitate this lady, because she was like, how is this even possible? Why didn't somebody tell me that I was going to have to pay income taxes on this money? Why didn't they take out what they were supposed to? And what you have to understand is that it's not the retirement company's job to tell you tax implications. This is why you consult with tax professionals before you make huge financial decisions, to see how it's going to impact you before you do it. After you do it, it's too late. Okay? If you've already taken the money out, there's nothing that can be done here except to tell you to get ready to write a check to the IRS. Okay? And then, taking this money, and paying down debt and all of this stuff. I've had people withdraw. And let me tell you something. Can I raise my hand and tell y'all I'm also speaking from experience. When I was younger, you know what? I needed to pay off some bills, and I took money out of my retirement account, because I didn't take it all out, but I did take some of it out. And now I'm like, I didn't know about finding other ways to make money, right? I just said, okay, here's this money. I can write a check and this is done. Life is good. Okay, no. I wish I would have had a video like this saying, no, you need to go talk to somebody first. Okay. So, and really, because I've been there, this is why I'm also talking about this right now, because this is something that runs rampant that people really don't understand, is that they look and say, okay, here's all this money right here that's just sitting here. Okay. Your money in your retirement account is not just sitting there. This is the money that you're going to need when you can no longer work, when you can, when you may be disabled, you might be sick, whatever. That's what your retirement money is for. It's for the time when you can't physically make money for yourself. You may not have enough passive income to sustain you. This is what your retirement account money is for. So you are really sacrificing your future for your current discomfort. Do not do that. Okay, unless you really understand what the implications are. And so you also need to understand what the benefits are of your retirement account. Can you borrow from your retirement account and pay that money back? Okay, see, that's a better idea than to take a withdrawal. If you can, but here's the thing, you guys, you got to pay the money back, right? And you're paying yourself back. So, so when I talk to people, about these retirement accounts, you have to understand that you need a way that you might be able to have access to the money without all the other tax implications. I have another issue that I have a client that's dealing with right now. She had some water damage in her home. What did she do? Took all that money out of her retirement account. Well, she makes darn near a six-figure income, has no tax deductions, and then all of that money that she took out of her retirement account created a tax bill that she wasn't ready to pay. And so now she has to go and set up some sort of payment plan with the IRS so that she can work on this tax bill. So, you guys, and here's the thing, is not all this stuff is tax deductible, right? Taking out money out of your retirement account to fix something on your home, let's say a roof or something. Fixing your roof is not a tax deductible expense. Okay? You might add that to the basis of your home, which your basis is what you paid for your home, but at which, at that point, that's what you get when you sell it, right? You'll get that benefit when you sell the home, but if you never sell the home, then you may not see any benefit from that. So just knowing that just because you take from your retirement account maybe to add on to your home or something like that, it doesn't mean it's going to be a tax deductible expense. These are the things that you have to ask about before you take this money out, and also look for alternate ways to to get the money that you need. right? Don't just look at your retirement account as the easy way, because yes, it may be easy in the beginning, but on the back end, that might be like just a tax disaster for you. Especially when you're not thinking about the other income that you have made throughout the year, and then that additional money bumps you up a tax bracket, possibly even two, depending on, how much you take out. And then you don't have enough withholdings in your, from your paycheck. If you're working a job, you don't have enough withholdings, then you get bumped up another tax bracket. That equals a tax bill. So, so when you're withdrawing from your retirement account, you're not getting that time that your money is spent growing. You don't get that back. You can't start investing like the same amount of money now. Even if you put it all back, it's not sitting there for the same amount of time as, if you got started when you were younger. Like this is, like I said, this is just something where it looks like it's easy money to access, but in truth, it's not. So, so this is where we have to be smarter about our money, that we have to, to build our financial teams, you guys. Listen, just because you're not a millionaire, it doesn't mean that you should not have a tax professional that you can call. It does not mean that you don't have a financial advisor that you can call. This is how wealthy people get wealthy. They have these type of people in their lives, on their teams, right? That's working for you, to help you make the best financial decisions for you and your future. Now, we can only tell you the impact that something is going to have. You have to make that final decision. But when you're making an educated decision, that's something completely different. An educated decision versus an ignorant decision, two totally different things. Because see, if you say, okay, I got it. When I get this money out, I need to set aside X amount to pay for additional taxes or whatever, but this is something that I need to do, that I have to do. You know what? You might be in that situation. Okay. And if that's your last resort, you've gone through everything else and this is what you have to do. Okay, great. But when you also make that educated decision, like I said, you can say, okay, I need to set aside X amount of money so that, when it's time to pay the taxes on this, I have this money. You don't just go and spend it all. Okay? Because the income tax part of that is still going to be due. Okay, so I hope this has given you something to chew on. If you encounter people in your lives that are talking about taking money out of their retirement account to pay for whatever, listen, tell them to go talk to a finance professional, talk to a financial advisor, a tax professional, an enrolled agent, a CPA, an accountant. Talk to somebody before you take the money out, because once it's out, it's out, right? So, all right. So, like I said, thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a fantastic day, you guys. I'll see you next time. Bye.